Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Have your YouTube video quality set as high as possible. That way you can read the numbers a whole lot easier. Have a calculator on hand so you can do some easy math. If you have a question or stock you want to go over live together, leave it in the comments and we'll get to it. And finally, remember, this is not financial advice. This is all for entertainment purposes only. All right. Happy Monday, everybody. All of December expiration are behind us. Let's go over our open positions really quick. We have a short call spread on everything for all January expiration. The Dow Jones Industrial Average ETF down $7 very slightly. Roku, we rolled this one. So we're trying to get to 34 cents. Right now, marks at 205. So this was a roll. We closed December for a loss. And now we're going to try to make up that loss plus get the premium we're trying to collect at 34 cents. AMD trying to get to 34. Not down that much, down $23. Not bad. SPY, we rolled SPY as well. Got some work to do on this one, but we've got a couple weeks here till expiration. IWM, same thing, down very slightly, trying to get to 20. We've got plenty of time. And the XBI coming back today, down marginally at 133. All right. Let's see if we can find some new opportunities. First up is US Steel. This one, so some fill in on this one. Back in August, they had a buyout bid. So the stock jumped on this day. If you were with us, we sold a call spread on this day that eventually got filled somewhere on the 24th, 25th, so we made our money there. And they decided this weekend to accept a bid from Japan at, I think, $55 a share. So it's up all the way up here. Let's see if there's anything to do with the options. Okie dokie. There aren't enough strikes on the call. Since it was such a big move, there aren't enough strikes up here trading. Maybe in February. Nothing in February. Okay, so this one's going to be a bust. Nothing to do here. Close, but no cigar. Next up will be Cleveland Cliffs in relation to this one, just because they had a bid in as well, but they lost. So they're up because of that. Take a look. Earnings are February 12th. So we got plenty of time till then. Here's the chart. Okay. Let's look at the call side. If you sold the 23 and bought the 25, is it worth it? 23 minus 8. 23 minus 8 divided by 2 divided by 200. 3.7. Skip that one. Put side. If you sold the 18, about the 16. 21 minus 7 divided by 2 divided by 200. Hold on. 21 minus 7. 3.5% there. So skip. We'll skip Cleveland Cliffs for now. Moving on, Illumina. They were in the news this morning. Earnings are mid-February. Can't remember what the news was, but they're selling off on it slightly. Okay, let's take a look at the chain. No volume here, so we have no liquidity. Same thing on the call side. Moving on. VF Corp, VFC. I think they had a cyber attack. So, earnings are February 7th. The North Face owner discloses cyber attack. Let's zoom out to the weekly chart here. Trying to see where there's going to be support. That makes sense. Go back to 2010 here. All right, they're down 8% today. Maybe something on the put side. Not a lot of volume. You'd have to sell the 15.5, 5-cent spread here. Call side, same thing. Hardly any volume. Some here at the 20, 22.5. So odds are someone's selling the 20 and buying the 22.5. Put side looks like they're selling the 15 and buying the 12.5. It's interesting. I'm going to pass on this one, though. Moving on. LNTH down 20%. Holy moly. I don't remember what the news was, though. Looks like a prostate cancer treatment data came in bad. Earnings are on the 22nd of February. Here's our chart. As long as you move past the 50, it could probably fall another 10 points from here. On the put side, yeah, right at the 50. You'd want to sell the 50 by the... well, there's nothing to buy here. Not enough liquidity. There's some volume here at the 55. Not enough to make it worth it. Call side, if you sold the 70 and bought the 75. So, same thing. There's some volume here, but not enough to make it worth it. I'd stay away. Next, Boeing. So, vengeance on Boeing. Earnings are the 24th. This thing has been a straight up rocket ship. We had our Boeing position, our short spread close in the money on Friday, so we took the loss on that one. If we can get to 293, we'll open another call spread on Boeing. So let me put a note on that. 293. If you did want to open one today, shortening the call spread, you move past 293. Now these guys sell the 282.5 out of February. So the 290. I think we're going to hold on tight just a little bit longer on this one, and then they'll open up another call spread. Hang tight. Chemtech up almost 4% today. But just looking at it, not enough volume. You'd want to sell the 75, and there's no volume, no liquidity here. Moving on next. Micron. I think Micron either got an upgrade or a downgrade today. I can't remember which one it was. Outperform. Maintains. Oh, there was a price target raise. So price target raised to 90. Earnings are coming up in 2 days. So here's our chart. We'll follow up post earnings and see what opportunities we have. Next, Palo Alto, PANW. Up marginally today, I think. Got a downgrade today at Raymond James. Too high valuation. Earnings are at the end of February. Up here in the stratosphere. Holy moly. Well, let's look at the call side. If you sold the 335 and bought the 340, yeah, that makes sense. 325 minus 248. Divided by 2, divided by 500, 7.7% there. Not terribly liquid, so that's a little bit concerning. 335 on the chart. 335. It's actually right here. That's way closer than I thought it'd be. What about the put side? If you sold the 280 and bought the 275, 210 minus 155 divided by 2 divided by 500, 5.5% there. So for obvious reasons, you get paid more to sell the call side. Just the strike that you need to sell is a little too close for the next 32 days. So we're going to hold on this one. AYX, Alteryx, down today. I think the news was an acquisition, private equity. So they're going to be taken over by private equity. Here's your chart. Sorry, one more earnings. I missed the earnings. Earnings are February, so this is past expiration. No bias here to the calls or the puts. Oops. No liquidity on the put side, no liquidity on the call side. Okay, moving on. Let's look at the TLT. Tried to open the call spread of the TLT on Friday. It didn't get filled. At least for me, it didn't get filled. Down again today. That would have been nice because it's down today. It may have actually, position may have closed if we opened it on Friday. Son of a gun. If we can get another leg higher towards, say, 100, I'll come back in and try to open the call spread. But wait, I'll wait till now. You want to open a call spread now? Sell the 103 and buy the 106. 58 minus 26 divided by 2 divided by 300. 5.3% there. Put side. Sell 93.5. Buy 91. Yeah. Yeah. 37 minus 14 divided by 2 divided by 250. 4.6. So sell the call side instead of the put side. You get paid more to sell the call side. 103 strike. Where's that on the chart? 103 is right here. That seems awfully close considering how far out expiration is. Interesting. Seems a little too close for comfort. How about February expiration? For February, if you sold the 105 and bought the 108, 81 minus 46 divided by 2 divided by 300, almost 5.8% there. Where's the 105? That might make more sense. 105's up here. Interesting. I'm going to hold out, see if it has one more update tomorrow. Wouldn't make this one today. If we made it on Friday, great. I'd hold off till now. Same thing, let's check in with gold. I think gold is up today. Marginally. Call side. You're 61 days till February. A little too early to start trading February right now, but we're getting closer. By the end of this week for sure. If you sold the 194 and bought the 198, $400 wide. 96 minus 47 divided by 2 divided by 400. 6.1% there. That's okay. 194 in the chart. Right about here. That seems fair, considering how close expiration is. I'll hold on to this one for now. Moderna, following up from last week, mRNA. No, The moment on this one has passed. Should have sold a call spread on the day, gapped up. Already selling off. On the put side, though, actually the put side looks interesting. If you sold the 70 and bought the 65, 87 minus 39 divided by 2 divided by 500. Never mind, 4.8% there. Skip that. Call side, you'd have to go all the way out to the 98. Sell 98. Buy 100, I guess. 105 is a little too far out. Actually, 105 is okay. $700 wide spread. 144 minus 67 divided by 2 divided by 700, 5.5. Pass. Next, a firm. Firm's down big today. It was down big today. Maybe it's rallying back. Morgan Stanley downgrades a firm to underweight. Price target's 20. Huh. All right. Earnings are February 7th. Here's our chart. Rocket ship up. Caught resistance right here. Slightly below this peak back in April of 2022. Wow, this one seems to be like a fighter. I don't get it, man. Put side. If you sold 32.5 and bought 27.5. 65 minus 22 divided by 2 divided by 500. 4.3 on the put side. The call side. Sold 54 and bought 60. No, 55 and 60. 110 minus 67 divided by 2 divided by 500. 4.3% there. Pass. The KRE. I'm still waiting for it to get to around 56. It did hit this resistance back from January of 21. If it hits all the way up to this resistance here at 56 from August and December of 22, I'll go ahead and open the call spread. You can go just a little bit more, okay? Carry, put down 56. All right. And we've got bank earnings coming up in about a month, okay? Got to keep that in mind. Go to our IV rank scanner. We'll sort by volume. See what's good today. The SPY. Russell 2000 was, I think, 50 last week. It's come down a little bit. We have our position open. Up again slightly. Got a top here, possibly another top here. Pull back. Our strike's the 197. So our short strike is in the money. 200 is out of the money still. So we just got to keep an eye on this one. It's only down $100. The spread is only $300, so a third of the value is lost. That's not bad. We got plenty of time there for this one to play out. Any pullback will make our position a lot more valuable very fast. But if you want to open something today, call side. Sell the 209, buy the 214 maybe? Yeah. Let's take a look. 114 minus 59 divided by 2, divided by 500, 5.5%. That's okay. What if you made the spread tighter to buy the 212? Sell 209, that's 114, minus 212, 76, divided by 2, divided by 300, that's 6.3%. So if you make the spread tighter, you'll get paid more. Sell the 209, buy the 212, 6.3% return. Not bad. We're trying to get 20, so our positions pay slightly more than 6.3%, probably around 6.5. Put side, maybe you get paid more on the put side. Probably do. If you sold the 187 and bought the 184, oh yeah, 107 minus 72 divided by 2 divided by 300. Actually, no, you get paid less. You get paid more to sell the call side. So if you want to open something here, sell the call side. Sell 209 by 212. Cool. Moving on. Jets. I don't know Jets. Citigroup. Earnings are on the 17th. It's exactly a month away. Why don't we look at JP Morgan instead? JPM. Earnings are January 12th. Awfully close for comfort. Look at this craziness. Just a straight up run since October. Call side again. For January expiration, if you sold the 175 and bought the 180, 88 minus 35 divided by 2 divided by 500, 5.3% there. Not crazy about that. Skip the put side. I wouldn't want to take that. And we just looked at the KRE. Pfizer. Skip. Upstart's up 6% today. Let's take a look at that one. Traded that one back in August, I think. Earnings are February 13th. All right. Boy, oh boy. Could catch resistance around 52. If not 52, somewhere around 65. But I wouldn't want to sell anything quite yet. Let's sell a call spread around 65. If you want to sell a call side now, does it move past 65? You'd want to sell... No, you'd want to sell the 62.5 and buy the 67.5. What do you get? 201 minus 152 divided by 2 divided by 500. Only 4.9. Skip the call side. You don't get paid for it. Put side. If you sold the 32.5 and bought the 27.5, that's 74 minus 27 divided by 2 divided by 500, 4.7. Surprised this doesn't pay better. Ivy's okay. February may be more lucrative. For February expiration, if you sold, oh boy, sold the 70, bought the 75, 320 minus 269 divided by 2 divided by 500, 5.1. That's still not worth it. Put side for February, if you sold, sold the 25 and bought the 20. 87 minus 37 divided by 2 divided by 500, 5% there. Look at the deltas. Okay, that's too close. No. Moving on. All right, back to the list. Start. Sun Power down 27%. I don't know that one. GameStop, no. Coinbase? We've been looking at Coinbase. Not very liquid on the options side, though. That's what always irritates me with this one. Selling the call side. Earnings are February 20th. Beautiful. Here's our chart. Same thing. Rocket ship up with the lower rates. Looks like it could be catching a top here at this resistance here at 150. That's what I was waiting for. As long as we move past, say, 194. Call side. 185 you'd want to sell. Just too liquid. There's a 20-cent spread here. Same thing, 20-cent spread here. You got a 40-cent spread on the position. It's even worse for February. Look at how low volume there is. Moving on. GDX. Stick to GLD. We already looked at that. Bank of America. Pass. The KRE we already looked at. Kenview, no. Robinhood. Broadcom. PayPal. No, no, no. ARK. Take a look at ARK. Traded this one before. Good liquidity here. That's always nice. Chart seems to be in no man's land. Just for since April 2022, it's gone nowhere. Which means there's really no clear bias. Not a lot of volatility. I don't know why it's on the list. Put side. If you sold the 45 and bought the 42. 51 minus 20. Divided by 2, divided by 300. 5.1 on the put side. On the call side, you sold the 57 and bought the 60. 58 minus 30 divided by 2 divided by 300, or it's 4.6 there. So skew on the put side. I'll pass on this one. Next. JP Morgan. Not yet. Zim. No. DocuSign. Down almost 4%. Okay. Takeover report. Oh, that's right. So earnings are in March. We had rumors of a takeover, hence this crazy move up. So if you want to sell the call side, make sure it's a spread. What do we got? Selling the 69. Oh no. No liquidity here. Hardly any volume. Look at the spread here. 81, 114. What about February? February slightly better. 10 cent here. Worse here. 75. No, too liquid. Moving on. What was the other one? Oil. Let's take a look at the oil. USO and XOP. Up 2.5% today. Traded XOP last week. Quick in and out trade. Easy money. Again, though. So we sold what? The put spread. I think either here or here. We sold the put spread either on the 6th or the 7th. Made our money in and out. But now, I don't know. For the put side, I'd wait for it to get down to 61 or so until the put side. Call side, it's interesting here. It's getting close to the 200-day, but a little higher up to 71 maybe. I don't know. I'm not comfortable selling either side right now. Put side, if you sold the 62. Let's look at XOP. You make a case for selling the call side and the XOP. That makes a little more sense. You've got this downward trend line, top, top, top. You got this upward trend line here, so at some point it's going to make a break to the upside or a break to the downside. Just don't know yet. For now, if you're not in oil, which I'm not, I'd skip and hold. Okay. UNG. End phase. Let's take a look at end phase. ENPH. Earnings must be coming up. Earnings are February 6th. Okay, good. What a wonko chart. Let's take a look at the call side. Sold the 145, bought the 150. What do you get? 297. 297 minus 229 divided by 2 divided by 500. 6.8% there. That's not bad. Liquidity is not the best on this one. We've traded this one before. You'll get filled. That's not the concern. It's if it moves against you. Liquidity really dries up. It's hard to roll. 145, 150. How about the 150, 155? 228 minus 178 divided by 2 divided by 500. That's only 5%. Put side. If you sold the 100 and bought the 95, liquidity is better here. 161 minus 104 divided by 2 divided by 500, 5.7% there. Where's the 100 on the chart? Nah, it's too close for comfort. 100's right about here. It can most certainly get there in the next couple weeks. I'll pass. All right, moving on. GLD, we already looked at. JP Morgan USD Emerging Markets Bond ETF. It's got something there. EMB. Oh my goodness, I've done work on this one. The hell? I don't recall ever trading this one, but apparently I have. All right. Let's look at the call side. No volume. Put side. Look at the 87 strikes. Someone sold a bunch of these. Where's 87 on the chart? That's why there's such high volume. 87's right about here. That's way too close for me. Maybe someone knows something I don't. I'm going to pass on this one. Carnival has earnings this week. We'll follow up. Walgreens has earnings January 4th. We'll come back next year. Figure that one out. Lucid. Chewy. FXI. Take a look at the FXI. Traded that one before. kind of in no man's land here. On the put side, if you sold the 21.85 and bought the 19.8, no, never mind. Maybe the 20.85. It's a $100 spread though. Pass. Call side. You'd have to sell the 25.85 just so you don't get paid for it. Let's look at the K-Web. No. We'll hold off on this one. Moving on. Chewy. Nike has earnings this week. Micron we already talked about. Let's look at Chewy. Earnings are in March. I don't know why Chewy's volatility is still high. It's post earnings. It's made the move. February is still a little too early. Yeah. One more page and then we'll call it for today. Nike, Clean Spark. Macy's, we already talked about Macy's. VF Corp, already talked about that one. Uranium ETF. Alcoa. Let's take a look at CCJ. That's a uranium stock. Earnings are February 8th. No volatility though. Probably gonna have to skip this one. Up big today though. Call side. For January, if you sold the 52 and bought the 55, what do you get? 60? $60 minus 29 divided by 2 divided by 300. It's 5.1% there. Put side, I don't think it's going to be worth it. If you sold the 41.5 and bought... Nah, skip the put side. What about February? If you sold the 55 and bought the 60. 94 minus 42 divided by 2 divided by 500, 5.2% there. Let's go back to the uranium ETF. What was it? URA. Not as liquid here. You're better off trading CCJ. Anything else? Delta. Coca-Cola. Take a look at Coca-Cola. KO. I mean, I guess relatively it is slightly higher volatility, but not by much. Earnings are in February. I see. Hit the 200-day, bounced off. Skip the put side for January. Skip the call side for January. For February, 25, 6 cents. It's not worth it on the put side, call side, pass on the call side. All right. Couple more, and then we're done for today. We're going to skip Delta. ARM. Eli Lilly. Earnings are February 1st. No news today, I don't think. Here's our chart. It's hit an all-time high. Maybe that's why. Call side. We sold the 80 and bought the 85. $111 minus 61 divided by 2 divided by 500. 5% on those. This thing is perfectly priced. There's no edge here on the call side. On the put side, if you sold the 59 and bought the 55. No, do the 60. Sell the 60 by the 55. 74 minus 27 divided by 2 divided by 500, 4.7. Skip this one. What about February call side? Sell 85 by 90. 162 minus 106 divided by 2 divided by 500, 5.6 there. It's not worth it. Put side, if you sold, skip the put side to a liquid. Take a look at Roku. We were trying to get to Roku, trying to get to 34 cents. This one's coming back. So we rolled this one on 11.3. We sold the call spread, sold the 95, bought the 100. Moved against us completely. It would have expired at a loss on Friday. So we rolled it, and now we've got to wait here for it to move back down. If it continues to move down, we'll make our money. Or if it just holds still here. I'd say I have Roku now if you're not in the position. I think that'll do it for today. Nothing new to open. We've got our 6 positions open. We'll see what happens later this week. We're going into the holiday season. These next 2 weeks will be very quiet. Once we get into early January, there should be a lot more volatility as the big funds are repositioning for the start of the new year. All right? That'll do it for today. Thanks so much for watching. Tune in every morning, 7:15 a.m. on the West Coast, 10:15 a.m. on the East Coast. We go live every morning trading options. Like and subscribe. You'll get alerts when we do go live. And also tell your friends that are trading options to tune in as well. Thanks so much for watching. We'll see you tomorrow.